Welcome back, investors, to Ticker Time News. I'm Adam, and here's the latest segment from the After Hours show. Given that Jefferies, and their ticker symbol again, JEF, reports its quarterly results just ahead of when the leading financial institutions kick off the earnings season, its report is commonly viewed as a gauge for the health of the group of big bank stocks. Over the past several quarters, the company's blowout results have indeed foreshadowed a stream of very impressive reports from the likes of Goldman Sachs, ticker symbol GS, Morgan Stanley, MS, and JPMorgan Chase, JPM. This morning, though, the script is telling a very different stories as Jefferies barely, with stocks selling off one day and gaining the next. Wouldn't it be great to know what the top 10 stocks are in categories like value, growth, dividend, and momentum? Well, great news. We just uploaded our top 10 stocks list for each of those four categories. That's over 40 high quality stocks ready to choose from that are constantly updated. So you always have the best names available. Click the first link in the description and become a member to get instant access to our top 10 value, growth, dividend, and momentum stocks, and so much more. We've done the research so you don't have to. Barely, I guess is the right word. Barely exceeded EPS expectations, while its revenue fell short of estimates. The slide in performance relative to expectations does not necessarily indicate that business conditions have considerably softened overall for Jefferies or the broader industry. In fact, the robust M&A activity, which is mergers and acquisitions, drove Q4 21 advisory revenue higher by 64% to a quarterly record of $588 million. What the significant step down does, what it suggests, is that analyst estimates may have finally caught up with the underlying strength in the advisory and investment banking businesses. Whether this factor leads to more modest beats from others in the space over the next 2 weeks remains to be seen. But it is something for investors to keep in mind. Beyond the more aggressive estimates, there are a few blemishes within Jefferies' report that are weighing on the stock and other financials, including the combined capital markets and other segment. It experienced a 30% year-over-year decline in net revenue. To be fair, this segment was lapping a challenging year-over-year period when a robust burst in equity and fixed income trading fees drove net revenue to a quarterly record of $590 million. However, the 49% plunge in fixed income trading this quarter is notable, illustrating that market conditions in this business are weak. As Jefferies transitions away from its merchant banking roots and builds out its investment banking, that business, it has achieved remarkable growth in the investment banking segment while consistently gaining market share. For the fourth consecutive quarter, Jefferies generated more than $1 billion in investment banking revenues. But growth is slowing. Overall, investment banking net revenue of $1.18 billion was flat quarter over quarter. And equity underwriting posted underwhelming year-over-year growth of 9%. However, it was lapping growth of nearly 150% in the year earlier. Now, the asset management segment, That continues to weigh down Jefferies' results, with net revenue down 52% year over year to $42.8 million. This follows a rough Q3, in which sales were significantly impacted by a difficult environment for multi strategy funds and lower performance by strategies that had strong results during the first half of 21. With Jefferies having rallied about 15% since late December, investors were totally gearing up for another blowout report. Due to raising estimates and sluggish results in a couple of key areas like fixed income trading and asset management, that anticipated blowout, it did not happen. While the investment banking and advisory businesses remain strong, there's concern that peak growth rates have already been reached, creating some angst for the financial sector ahead of earnings season that kicks off this Friday morning. Thank you for watching this segment from the After Hours Show. If you want to watch it live, then join me on this channel every day the market is open around 5 p.m. for the latest stock market news, deep dives on your favorite ticker symbols, and most importantly, answer your questions. Make sure to click the like button and share this video with others so we can all reach financial freedom. Thank you so very much for watching, and I will see you in the next video.